Woo! Welcome to the Trading Pit, your virtual gathering for premier traders. It's January 4th, 2024, and man, we've got a crazy show today. After calling for a cool off on Tuesday's show, Bitcoin retreated from 45K. Now it's back in the range it's been doing for weeks now. So now we're going to be asking what's happening and where do we go next? I'm your host, Marconi White, and today I'm joined by two of my favorite analysts, JJ and Benjamin. Gentlemen, welcome. So glad to have you here every Tuesday, every Thursday, whenever you're here. And JJ, as we do, I'm going to start with you. Tell me, what is the mood of the market? Is it bull? Is it bear? Or is it boring?
Still bullish, but looks like we're running on fumes here. So quite a lot to get into today.
Okay, running on fumes. I want to hear this because this is a continuation of what we talked about last Tuesday. We talked about the froth in your cappuccino getting a little too high. We were telling everyone we were cool off, and we saw some of that, but I don't think that's the cool off we're expecting, right? What we just saw.
No, I mean, we were expecting kind of a leveraged washout at some point. Came pretty quickly there. I think probably that following night we got that large wick down. You see that here. We were trading up around 45,000. And like we were explaining, what drove it up from here was short liquidations, right? So it wasn't necessarily organic buying. It was people having price pushed into their liquidation pools, and that was driving price higher, but wasn't necessarily new money coming in. It was more just old positions getting washed out. Once we finished washing out those shorts, then we came all the way back down, quite a large liquidation run. You could actually see it pretty beautifully here. So just wiped out all of these longs in one foul swoop, went all the way down to 40,000.5 or so. And then it bounced back. And at the same time, like there was a lot of confluence with that level. You see it hit the 50-day MA right here. Also dropped back down to that 50 RSI mark we've been discussing. And it's had a slight bounce. It's not really the most convincing thing in the world right now. There's a lot of signs that are kind of making me cautious here. If it wasn't for the ETF possible announcement, I would be completely bearish. But given that could come over the next week or so, there's still that outside chance of a blow off top to new highs, say above 47,000 or so. But your risk here, it's really getting elevated now, in my opinion.
Well, let's unpack that for the audience here. And you say these signs. I know we talked about them a little bit on Tuesday. Some people maybe weren't able to join. Walk us through some of the signs you're seeing that continue to say, you know, we may be a little too frothy right now.
Well, just on this chart alone, right? You see this red line right here. This came about on December 29th or so, right before the end of the year. And you see it was green this whole way up from September. So we were just riding this trend. This signal was bullish. And now it's flipped red for the first time since July, right? And we know what happened after it flipped red in July. It just traveled down from about 30K all the way down to sub 25,000.
Oh, sorry, what exactly is that ribbon again? Is that the
whole MA? Whole moving average. Okay. It's just kind of a blend of different moving averages and gives you a signal, bullish or bearish on different time frames. And here on the daily, we see it's flipped for the first time since July to red. So that's kind of one warning signal that we see. Looks like momentum's fading on the RSI. Not to say we couldn't get a nice bounce from here, but it wasn't like what you'd want to see is a stronger bounce than this after such a strong sell-off, and it's not really there. And there also hasn't been huge amounts of spot volume even after that large sell-off. It's just kind of been small, gradual bounce here. And then if we look at the order books here on Coinbase, it's not really convincing either. There's not a whole lot of bid liquidity. Oh, lost it. 1 second. So we see that there was this huge wall of bid liquidity that really helped drive price up to that 45,000 range on Sunday night into Monday morning. We were down around our current range, and then all of a sudden bid liquidity came in, and people started to front run that with leverage. They said, hey, look, people are trying to buy below the current range. So they basically front ran those orders, drove price up, and now the bid liquidity is gone. So there's not really like protection here in the order books. There's also not resistance to the upside. So that's one reason why we could get a blow off top as well. There isn't necessarily a sell wall like we saw over the past month or so that's kind of pushing price down. It's just kind of free air here to go in either direction. But that's hinting that some extreme volatility is going to come. If we look at the BVol volatility index, this is a measure of Bitcoin's average trading price range over the course of, say, 30 days or so. This looks like it's about to break out and rip. So I think we should definitely be expecting more volatility. I think Tuesday night was just a small sample of what's in store. We're probably going to see some whipsaw price action into this ETF announcement, whichever way the reading goes, it's going to be quite volatile.
So we're expecting volatility, but I guess from a compression standpoint, because oftentimes we've looked at options and they've given us some indicator of whether or not that pressure was going to push us up or down. Do you have some indication now? I mean, you just said, hey, I'm expecting volatility, but it doesn't sound like the direction is quite clear just yet.
It depends on the ETF announcement, right? So I think the market has a very bearish structure right now. There's not a whole lot of, like, the things you would want to see is obviously well-held support levels like we saw the last time we were in this range forming here. You would want to see, like we got with that liquidation run, you want to see low open interest and whatnot. So all that's there, but we're not seeing the accompanying support levels come into play. So it's just kind of open order books here, which is making me cautious. At the same time, you see volatility starting to perk up. The options market, prior to the crash, they were buying, I believe, 42K puts in a pretty rapid order there, and those all hit. And then it seemed like they took that opportunity to buy more upside. Derivative Insights had a nice thread where somebody placed a 1,000 BTC call spread of buying the 44,000 call expiring in January and selling the 50,000 call. So they're long this. Their upside is everything above basically 44,000, and then they had that hedge by selling the 50,000 strike. So they did take that opportunity to get more long, which is one of the reasons why I think we may see that blow off top, but it's not really convincing from a market structure standpoint that it's going to be a slam dunk automatic thing where this just rips up and never comes back down. I think even if we do get that blow off top, the volatility that will accompany it will send us back to at least this current range or so after the market processes the ETF news.
Okay, so let's just to summarize here. We've got the spot volume didn't really come back after this recent sell-off, so it's a little bit neutral, kind of trending bearish. The perps have kind of reset. The options aren't really giving us too much of an indication. You did see that one order that you just walked through, and we'll get to Dixie in a moment. But so far, we're kind of sitting in range. The B-vols is saying, hey, we're going to have some volatility coming in. You best be prepared. And at this point, your bias seems to be a little bit, I mean, we could have the blow off top. That's still kind of best case is thinking about that coming in with the ETF. And I guess that is assuming that ETF is approved. So I mean, I think I know the answer already, but if that ETF approval doesn't come through, I mean, is there anything but just crazy downside?
I think if the ETF doesn't get approved, we'll see this break. So we saw it kind of come down and basically perfectly retest that 50-day moving average. I think it's a safe bet. We would fall probably down to the 200-day moving average, which is around 32K or so if the ETF isn't approved.
Okay. So that's a fantastic buying opportunity. Although I'm sure a lot of people then at that point
it'll be scary.
Yeah. Yeah, it'll be scary. Okay.
But you have to think of how much like leverage is built in right now, right? So everybody's been front running this news since October. And they've, like we just saw a small sample of what can happen when things start to go in the opposite direction. This whole way up, we were seeing shorts get liquidated in mass. Every leg up, we were just liquidating shorts, liquidating shorts, liquidating shorts. Now we could see that pendulum swing, and it'll be longs being hunted on the way back down if things don't go as planned for any reason.
Oh man, the hunters are coming out.
Yep.
Hunters are coming out. All right, Benjamin, you've been sitting in silence. I know you've got some comments to add. What's your perspective on the analysis that JJ just offered?
I actually agree with them almost on majority of the points, and I agree that if ETF gets delayed or denied, we are going to see a lot of violence, and I can see a 5K or even a 7K candle, red candle in one go. Like, there wouldn't be enough time for algorithms or engines to respond, and I think we'll see a massive overload of sort. Yeah, it will be very ugly because,
Okay.
but I think it will be from two perspectives. I don't think it will be the issue of the cash leverage futures that we have on Binance or Bybit or OKX, because I think those are pretty much already deleveraged, in my opinion, because open interest has fallen quite enough. But I think we'll see a bloodbath on alts, and we'll see a huge drop in CME OI. Because right now, CME is the largest open interest when it comes to futures for BTC. I think a lot of leveraging is happening over there compared to what is happening on USDT margin perps in crypto. And we already saw a mini deleveraging event yesterday, which has basically reset funding. We're seeing a lot of pairs with negative funding rates, which is pretty good. And OI has also reset. Like it was already dropping. So I know everyone was reporting that few billions of OI got wiped out and so on. I don't think it was that bad. It's the bad calculation of OI in USD terms that they have. But when you look at the native open interest, it's pretty evident that it's been declining for some time now since the rally started. In my opinion, since the December high of 44,485, I think we've seen open interest drop continuously most of the time on the native side of things. So I don't think there was a lot of froth in that. I think a lot of froth basically came from the CME open interest and the amount of inflows entire 2023 got as a result of Balaji Srinivasan's $1 million bid for Bitcoin, and then the banking issue, and then the ETF promises. So I believe a lot of leverage sits on the other side of the world than the APAC region, to be honest.
The thing to be aware of as well with
yeah.
CME is they're not historically the best Bitcoin traders either. Like
Yeah,
typically,
they are not. They're terrible traders.
Yeah.
Coming
Like
in and
anytime-
shaming TradFi. Love it.
Yeah.
All right, go
like
on.
they were very short at the bottom in 2022, basically rushed in after FTX collapsed and started shorting it. And same thing in 2021, they were extremely long at the top and got washed out. So when you see like high CME premiums, like we've been seeing, that I think that's one of the many red flags. And also they're front running an event. So if things don't go as planned with the ETF, or even if they do, that pressure that drove it up, that front running, the ability that they have with those futures, it's gone. Like they'll close out those positions, just take the profit. They're just waiting for that final catalyst, and then they're going to be selling.
Yeah.
Like they're not going to hold on to these longs forever. It's highly leveraged positions.
If you especially get a delay, I don't think we'll get a denial, to be honest, but I am putting delay and approval on a 50-50. I am putting denial on, like maybe I should put it on 1% or so. I don't think we get an outright denial, but they probably figure out a way to give a delay for a few months of sort. That would be my base case. But if in case this gets approved, I think we see like 48K, but that's as far as it goes, because you need a lot more buying to consistently happen.
Yeah,
I'm not sure how much that will happen, but one thing could happen is that
I want you to walk through your two base cases that you put up on Twitter, if you can.
Sure.
I thought that was a nice way of outlining your perspective on where you see this going.
Mm-hmm. Yeah. So December we made a peak of 44,485 approximately, depending on the exchange that you're looking at, and that became the range high. That became 2022's 23's high as well. So if you take that as a range and start looking at it, like basically we were just consolidating the entire 30, 34, 32 day range, if you look at it. So not much has happened on BTC, and in fact, even on ETH, not much has happened. We've just ranged, building like a pennant, and then it was a horizontal range. However, you could call it as, you can put a channel. It's going to be perspective. But basically, what it tells you is we've been ranging in a 10% zone. And this led to alts completely blow up. We saw what happened with Solana, we saw what happened with Sai, Sui, are when so many tokens. We saw total 3 breakout, and now it is retesting the breakout. So what I see is that if we get approval, BTC probably goes to 48K or so, and then there's going to be some time required for spot bidding to continue. Nobody's right now sitting with gunny bags of dollars in the bank and having their finger the mouse ready to click the market buy button. I don't think that is the case. So what we could probably get is a 5K or a 6K candle if it gets approved. If it gets delayed, though, you are going to see a deleveraging from CME. You're going to see a lot of spot selling from holders who have held it from last year. They did not take profits on the tax selling event, that typically happens at the end of the year. Not much of tax selling happened. And when you look at this range scenario, the orange range, suddenly we saw on the first working day of the year, prices suddenly run up. We had huge spaces, huge premium. Funding rates were so high. There were liquidation levels near 44,500 or what. That got taken out, and then we immediately on the same day saw a huge drop. Right, like one bad news or a FUD or just an opinion. I think it's just an excuse. But we already started seeing a front run on coin ticker. Coinbase was dropping like 20% the previous day, right? So that was already a front running indication that there is deleveraging happening everywhere. So I don't think we are in a state to run to 55K or 60K yet, even if we get an approval.
Yeah.
Um,
Well, yeah. So I want to ask something that we've talked about several times in the show, because if I look at your base case 2, and last week or last Tuesday, we were talking about the idea that we're heading for a cool off. Someone could look at the base case 2 and say, okay, that's a cool off. We're going to be hitting 40K. But you guys have talked about something much larger, right? Something that would take us down maybe in retesting the 30K range. So is that's something that happens after the ETF as we start to get in further into Q1, maybe even going into April, where we have the halving?
I think it probably happens sometime around end of January into March, like that February window or so. Just because look at how long this uptrend's lasted, essentially since September, right? So naturally the market's going to find some mean reversion here, whether it comes after an ETF approval or denial or delay. The market's going to reset and it's going to find these averages again. And these are going to be the times that you want to enter. Even if there's that large FOMO candle, like we already see some distribution over the past week or two here as well on the divergence chart. So this is one thing we've been hitting on pretty consistently here, just showing that the whale wallets were buying throughout December. And then all of a sudden towards the end of December, that ended. So we see these green dots here. And this indicates the large whale wallets that were basically driving this move up. Now they've started to distribute. And you typically don't want to be counter trading them, right? These are people like they have more knowledge than us. They know things that we don't, and they need this liquidity that's coming in now out of FOMO to exit their positions that they've held since the sub 30,000 range when they started buying here.
Right. Okay.
So even if we do get that move up, I think it's inevitable that we come back down and reset.
Well, it seems like we don't have any indications that retail's really showed up to the table. You've got the folks that have been in the market since the bear market really started, and they've stuck around, but we haven't seen a rush from retail at all, unless you guys are going to tell me I'm off.
Retail is starting to come in, definitely. I mean, we saw that with the BRC20 ecosystem a little bit in China on, it's not a joke. There's definitely grandmothers buying a lot of those inscriptions and so on. So there is definitely a bit of retail presence that is starting to come in.
Okay.
There's already the airdrop based retail is here. They've been doing whatever they could. And DWF Labs is doing a pretty good job in getting a lot of those retail oriented tokens do a very good run. So retail is starting to come in. And my biggest worry is that they're not bothered about BTC or ETH or even Solana. There's a lot of focus that's going to altcoins too soon in the game. Typically, in the beginning of cycles, such as now, if we put this at par with the 2020, the halving beginning, the focus is typically on BTC and ETH. Even if ETF and all these narratives are out there, nobody's so excited about going and buying one Bitcoin because it is going to go 3x. Nobody is. That's the biggest problem.
Yeah, they go straight down the risk curve.
Money starts, I mean, there's instantly, the moment there is a positive discussion on BTC for the ETF narrative, the next thread or the sub thread or a reply to the thread It's about what could be the beta to this. Okay, great. It would be ETH. Okay, let's trade the ETH ETF. Then what is the next beta to it? Okay, great. It is going to be Solana. Okay, all right. Now it is going to be Bonk. Now it is going to be K Bonk. I have no idea what it is. And then there is Tia, there is Sei. I have no idea what these are. And
Yeah.
then there is Cyan, which is some ecosystem token in a L1, which has like 5 million TVL. All right. Now, this is the discussion that's already happening, which is what scares me.
Yeah.
This is not supposed to be the discussion happening.
Okay.
This should be the discussion happening
they're skipping steps. Yeah.
8 months down the lane. Yeah.
Well,
8 months down the lane, it should be
like
happening.
when Bitcoin's in a full blown bull market, making new all time highs.
Exactly.
That's exactly when you want to be going down the risk curve
Right.
things like this. But they put the cart before the horse, and I think we saw just a sample of what's to come with that liquidation run on Tuesday night.
Well, we'll see. Okay. Well, I want to kind of wrap up this market assessment. Sort of what we're seeing is, I think, just to summarize here, the market is kind of at a point where expecting some volatility. May see that push up if we get the ETF approval. If it's delayed, we're expecting obviously a move down, not the massive correction that would come later, where we're looking to retest more of the mean reversion. There's a question here I want to get to in a moment. It's coming from the chat saying, well, how do you play this? How are you going to be playing this correction coming up? And I want to get to that in a moment, saying, how do we play the correction? January 31 options, spot sell, perp short. So we're going to talk about it in a minute when we talk about trades. But before we do that, I do want to ask JJ, we always talk Dixie. What is King Kong dollar looking like? Is there any risk that this is going to come in and wreck the party?
Yeah. So that's another reason why I've been kind of beating the bear drum today. So if we look at this, it's shot up pretty well from the bottom, right? As we expected, like we said, if there was that cool PCE report towards the end of January, we could see some sell-off in the dollar, and that would give Bitcoin room to run back towards the highs. It did. And then it bottomed pretty strongly here last week, especially into the new year. We just see it's kind of been on a nonstop run. It's right up against this crucial 50 RSI resistance. So I've seen this confluence between BTC and DXY repeatedly. When one is testing the 50 RSI in one direction, the other's testing it in the opposite. So you see it here, it's right on this line, and BTC as well is resting right on the 50 RSI mark. So if it breaks up from here, I think BTC is going to break down and vice versa. So this could be kind of the top for the dollar now. And if it fades from here, then we could see that blow off top. But you're really in a high risk zone if this keeps going, right? I think it could run back up towards at least 103 over the next couple of weeks, and that would just do damage to Bitcoin entirely. I think it'll probably move whichever way Bitcoin moves based on this ETF narrative. I think if the ETF comes in, we'll see the dollar sell off. If the ETF news is delayed or denied, we'll probably just see this rip, and we'll probably see some other signs go along with it as well. Like I think it's all part of that volatility that we were talking about before. Is the dollar looks like it's bottom near term, and it's going to cause some damage at some point in quarter one, whether that's this month or next month, who knows? But the warning sign is there.
Okay,
so definitely a strong yellow light there to be cautious.
All right, more signs of caution. I feel like we're just one yellow stoplight all day long. All right, well let's give the audience a little bit more of what they're looking for, which is questions about trades. So I wanna bring back the first question I just asked from the audience. It says, how do we play the correction then? January 31 options, spot sell, perp short. This is coming in from JB. Gentlemen, what are your thoughts there on this this upcoming correction? Either, I guess it's when we say correction, I'd really clarify it's volatility either way, right? It's either going to shoot past up to 48 or it's going to come down to 40. How are you guys playing that?
I think you want to wait a little bit here. Like in this zone, right, where we're at above 43,000, there's not really a strong read one way or the other. I think it looks bearish, but if we get that ETF news and you're short, you're going to get ripped. Liquidated to the upside, so you don't want to rush in just yet. But if you start to see it break down back towards the range lows, that might be a good spot to enter. Otherwise, like my personal strategy would just be waiting for that blow off top and then to enter some put positions then, because they'll be so cheap. Like if we get that upside volatility, people won't be looking for protection. There'll just be FOMO in the market, I think.
So going in,
on those will drop.
if we see some action heading north, you're putting in puts. What about if it goes south? Are you waiting a little bit longer to go long? And you're waiting to see if that holds, the 50-day holds?
Yep. So I'd wait to see. You let the market come to you, right? So if we start to see confluence here, like say we get a deep drop to 30,000, and then all of a sudden you see massive bid walls stacking up, futures are washed out, there's no more leverage in the system, etc., and people think Bitcoin's going to zero, that's probably the time to enter.
Yeah,
But
that's probably what is going to happen if we get a delay.
yep.
Or if we get a denial. I mean, welcome 25K. That's for sure. If we get a delay, then probably we touch 30K zone, maybe a little bit of low 30Ks, but that's definitely inbound if we get anything apart from approval. And if we get an approval, I would still take up puts at 45 to 48K, just pile it up. It would be very cheap, in my opinion, at that point. And I don't think it would still be a sustainable rally. It would be very impulsive, and then we just.
You could probably sell upside call spreads too at that point, because implied volatility would go through the roof if, say, we move up to 48,000 in a single candle. FOMO would be insane. Implied volatility levels would go through the roof, and you could probably sell call spreads and then buy cheap puts, out of the money puts, with the credit you receive there. Turn it into a free trade. But yeah, I'm not in a rush to catch the night. Like, say we do drop down, it's going to take a lot of consolidation after that drop down to really find a bottom. So just wait for the right signals to come in place. Like, you'll see the bid liquidity stacking up, probably see some negative premiums on futures, like backwardation there. There's just like those typical things you see at the bottom, see whale wallets start buying again, etc. And just wait for that confluence to really enter. If it just drops down from this level, we don't even get a chance to sell. Just be patient and wait for that. If we do get that blow off top,
yeah, because buying that liquidation is going to be much more profitable than looking to hedge over here, in my opinion.
Yep.
It's probably not even worth it trying to top tick this and speculate on the potential ETF sign on whether it is going to be a blow off top or not. I mean, it will get evident at one point. If before the news we go below 40K and take out the base case 2 that I have, take out the liquidity below 40K, and then you get the approval, then it is definitely going to 50K, right? I mean, that's a great long trade. That's going to be like a 25% run. That's pretty good. And I don't think beyond that it will still have fuel left. Now, if we don't get the base case 2, and if we just go with the base case 1, which is a very technical base case where we fill half that liquidation wick and then just go up because funding is already flat, open interest has died down as much as possible, basis is down to neutral. So everything is cool right now. We are facing these headwinds from dollar and NASDAQ and all those other assets. So there's definitely a cool off zone over here. But if we get a confirmation, let's say we have closed on a weekly below 40K, you're better off just taking a small hedge shot, perhaps at 40K or somewhere around in that zone, because the range is broken for sure. And it's a 40-day range that will be breaking down at that point. And you can keep that as a hedge and just try to buy up more BTC near 30s. That would be the case to do, because it's still going to be a bull run. It's probably a few months down the lane, or maybe we get the repeat of 2020. After the halving, it goes on another consolidation, and October it starts the run, and then we run up that 6 to 8 months and finish the entire run. That's highly probable as well, right? So by that logic, is it even worth it to look for top ticking this rally? I don't think so.
Yeah. So what I'm hearing here is don't go aping regardless of what happens on the action here, because there's still enough. There's the market's momentum could still take it in a direction you aren't necessarily expecting, and it doesn't sound like anything to what you guys have said today. It doesn't sound like there's any impulse that says we see a massive amount of demand coming into the market that's going to sustain this rally. So don't expect that to happen. Obviously, that can change. We could see a lot of momentum start to happen as you get into the end of January. But since all eyes are on the ETF right now, it seems like a good time to be cautious.
Think of how long we've known about this event, right? The ETF, even if it happens, every single person in the world who isn't living under a rock has known and has front run it, right? Like there's nobody waiting for the ETF to buy, right? They're waiting for the ETF news to sell. And there will be exit liquidity that comes in from, say, sadly, people's 401ks and whatnot, but that it's already priced in the upside. Like the massive multi-billion-dollar positions are already in position.
Yeah, on a news-based scenario, yeah, it is priced in. But the long-term impact of that buying is definitely not.
No,
so,
definitely not.
I don't think JJ or me, we are bearish about the long-term impact of ETF. Long-term in the sense, even 8 months down the lane, I don't think we are bearish about it. If it gets approved, even like 6 months later, that's still fine.
Yeah.
But is that news going to result in a 40% candle? Definitely not. It's not going to be the case.
I want to ask another question coming in from the audience here. It comes in from Ali. Ali, I'm not going to pronounce your last name because I'll probably get it wrong on air, and I already humiliate myself enough. He says, I've been in coin, kind of wish I'd sold at the end of the year. What do you think of it going long-term 24, 25? And I think I want to expand this out to you guys to think more broadly about equity stocks that have exposure to crypto. So if it's coin or if it's mining stocks, how are you guys thinking about those in terms of playing the strategy? Would you guys be looking to use those as either buying puts on those companies if we go up at 48K, or going long if you see some opportunities there?
They're very much leveraged beta, right? So it's almost like trading altcoins, because when BTC moves, they move in such outsized fashion. Like as we see here with coin since October, went from 70 to almost 200, around 190 or so last week. And that it outpaced BTC the whole way up. You see that with MicroStrategy, Bitcoin miners, et cetera. They all outpaced Bitcoin. And they do have very liquid options chains available. So I'd look at them as kind of the premier beta play when it comes to playing Bitcoin. In terms of coin right now, this obviously isn't the best looking chart. Maybe it bounces back to the highs if we get positive ETF news, but I wouldn't be holding on to this if I was up massively, say from October or so. You just got to take the profits when they're there.
Yeah.
Maybe leave a little bit in case we get that ETF news and it pops, but I think long term it's still bullish. Let's look at the further out chart. Like this is still a bullish trend, right? We had that long period of compression and then it finally broke out. Now it might do some back testing, but over the next year or so, I think this will be a very bullish thing, and that goes for all Bitcoin stocks.
Well, I was going to say, but so let's play that scenario out. We see the approval of the ETF. We see this pop up to 4850K. Are you buying puts directly on Bitcoin, or would you see people play the beta play and do it on these stocks, assuming that you're going to just get an outsized return?
Yeah, I would absolutely do it on stocks. I'm in the US, so I can't actually trade Bitcoin options directly. I have to trade the proxies. So I'd probably buy some MicroStrategy puts to say this blows off to 750 to 800 or higher. In that scenario, I think those puts would be extremely cheap, and I think you would see reversion back to that, say, 500 level at some point by the end of quarter one. So I think that's a great way to play it. Same goes for miners, Mara, coin, etc.
Yeah. Mining stocks, especially mining stocks. And those instruments, when it comes to options, for anyone who was asking about this ETF scenario as well, you're better off taking a hedge using those stock options rather than taking it up on Deribit or any of the other options exchanges directly on BTC, actually, because the case for Coinbase is not just about BTC doing well, but it is about ETF. In fact, the one who gets most impacted in this entire market, if ETF gets approved or delayed or denied, is Coinbase. So, because it directly impacts their revenue, right? Like whether they're going to have a next double X growth or triple X growth is going to be dependent upon two factors. One, if BTC gets an ETF, if they are the custodians or not. And the second thing is base protocol, right? But base protocol is also dependent on how markets behave at one point or other. So coin is going to be a highly volatile and like a good asset to gamble upon in this coming season at par with BTC, or maybe it does even better than BTC because of all these factors. So it's rather better to take some puts, or like call spreads or whatever that JJ has in mind on those type of stocks, rather than trying to time it up over here at 48K or 45K on BTC in
Okay.
our native options.
Okay. So I think, folks, you've heard the play as we start to look at this range that's about to break out. We're expecting the volatility to happen. You just heard both from JJ and Benjamin how they're expecting two different ways that someone could play that. I guess, gentlemen, I want to ask you before we wrap up this show, are you looking at any other trades right now? I think I know the answer, but I want to hear from both of you. So, Benjamin, I'm going to start with you. I know you've got the screener. You're using that often to look at maybe scalping opportunities, but are there any other trades that you'd want to share with the audience today?
Not really, actually.
For all the reasons I think we discussed
It's-
before, I think he's a little cautious.
Yeah.
You know?
Yeah, I'm a little cautious. Like last night, I think we saw a lot of trades on Say, and only after the trades happened, I started reading up on the token much more. But yeah, I wouldn't rush on
Yeah.
trades right now. But there are some tokens which are doing well right now. I still think we're going to get a bit of a correction at one point or other, whether it is before ETF news or after.
Okay.
I think there are better opportunities coming to buy. I wouldn't buy. A lot of these tokens are on their price discovery and all-time highs. So
Yeah. Well, I like the commentary here because it's so easy to feel like you have to get in more reps by doing more trading. And actually, there is a rep in trading where it's literally sitting on your hands and waiting for the trade to come to you, as JJ you were talking about. Which I'm thinking about your dating life. Did you approach your wife or did she approach you? I want to know.
Actually, I was about 21 at the time, and I was a bouncer, and she was a waitress. So tale as old as time.
Tell as old as time. I love it. Okay. Well, no, you got to explain though. I guess she approached you because she had to go through the door, and you were the bouncer.
Yep. So she
okay.
came in
All
for
right.
work, and yeah.
So
Rest
again, he uses this philosophy in all aspects of his
You
life.
let the best trade come to you. Yep.
That's right. Okay. So JJ, tell us, you've talked oftentimes about the ETH trade, doing the grayscale trade that's been free money. Is that still looking strong, or are you think it's time to close it out and just wait for these ETF news to play out?
It's gone up a lot. So if you've been long, might not be a bad spot to take profit or just really add to your ETH shorts there to hedge it. But if we do get that ETF approval, I think you'll see this jump pretty rapidly. So personally, I'm still holding on to a small amount of it just in case we do get that approval. And if it just crashes, oh well. But it's become like a free trade at this point. So that's all. The way I look at trading is just you want to maximize your ability to get free positions, right? So rode this up from $12 or so, and now it's at around 20. And I sold a substantial amount of it, and now the rest I can just hold on to, and I don't really care what happens to it. But if we get that blow off, even better. But if you're looking to enter it, I still think it's not a bad trade if you want to short it against the futures. You still have that premium baked in. There's still that upside in play. We know the ETF is coming sooner or later, so eventually this will reach par, I think, at some point in 2024. It's just a matter of when, not necessarily if.
Sure. Okay. All right. Well, any other trades? Anything else on the sideline that you'd like to mention before we wrap up?
Just really waiting for that fat pitch. I think it depends on what the dollar does. Like if the dollar blows off, the one thing to remember is that it's going to be devalued. Like if we start to see the bond market break or just legacy turmoil or whatnot, that's going to create the perfect scenario to go long Bitcoin, to go long alts, etc. But you want to wait for that scenario to happen because the downside, if the dollar rips up from here, is nearly unlimited, right?
Yeah.
And it's going to provide
it's going
excellent
to be catastrophic.
Yep. But we already know the response. So if we do get that blow off dollar scenario, it's just that's when you want to go all in long. So just waiting to see what it does. If it rips up, then that's your green signal to enter in the blood.
That's the bat signal coming out to say go irresponsibly long is what I'm hearing.
Yep. Yes.
Okay. All right, gentlemen, thank you so much for being on the show today. This is, I always find these shows interesting when we're kind of in a waiting period. It's so easy when we start to hit the massive bull FOMO time. It's also interesting when we hit the bear market time because it's so directionally, you can figure out exactly where we're going. When we're sitting in these sort of calm waters waiting, it requires patience, and that's not always easy for myself, you guys, or the audience. But this is a critical skill to have. So I think that's kind of the I would say the narrative of today's show. So JJ Binneman, thank you for joining today. For all those out there, appreciate you guys joining our live show coming in. Obviously, we're going to have a recorded version of this going out. But you're out there, stay strong, stay safe, keep some dry powder because we know opportunities are happening. And be sure to tune in next week. We're going to be back on Tuesdays and Thursdays. All right. This is Marconi White signing off.